investor doing things on your own? How about someone working with a firm that isn't so responsive or in sync with your investment philosophy? My podcast talks you through all things financial. Look, there's stuff you don't deal with very often, but investments, insurance, and retirement is something we plan for each and every day. This is the PennyWise Financial Podcast, and welcome to the show. Welcome to the PennyWise Financial Podcast. This is Constantine here at Monarch Wealth Management with my co-host Sam Gueli. Welcome to the show, everyone. Today is Thursday, August 4th. Winding down the summer, I guess, Sam, right? Trading volumes are a little lighter. A lot of hedge fund managers are on vacation, maybe.
Yeah, well, for me, it just seems like the cold weather's coming up.
You know what? I did a count the other day, and it's about 5 more weeks. About 5 more weeks of my boating season before the docks close up shop. And then I got to start thinking about winterizing my boat.
Yeah, it's kind of
insane,
depressing.
Isn't it?
Just seems like summer in general has kind of flown by a little bit.
It really has.
I don't know. It is what it is, though.
It is what it is. And the markets are speaking volume, right? So we've definitely turned things around a bit, I think, since the lows of the market this year. Why don't you dive into some of our numbers and tell us what we're doing?
Yeah, I would definitely agree with you. Things have been turning around pretty decent for us. We'll move right to the Dow Jones to start it off. For the past week, we're only up about 1%, but over the past month, it's almost 5%. Now the year-to-date number's still down about 10, but that's a lot better than what it looked like.
I like 10.
A month ago, 2 months ago.
I like 10.
S&P 500, same pattern here. Over the past week, we're up 2%. Over the past month, we're up almost 7%. Year-to-date, we're down 12%. But I remember all these, year-to-date numbers were up over 20 easy. So things are looking pretty good. Even the NASDAQ, over the past week, we're up 4%. Over the past month, we're up 10%. So the year-to-date number there is still down about 19%. But again, it's a good trend. And even the Russell 2 over the past week, about 1.5% positive. Over the past month, it's almost 8% positive. And year-to-date, we're still down 15. But, things are looking better.
So this past month, I mean, essentially, it sounds like pretty much across the board, just about every index is up between 8 to 10+%. Mm-hmm. That's a pretty big move, right?
Yeah, I mean, I remember we were doing these podcasts, and even outside our podcast, we're talking about the market, and we were like, oh, man, we're getting killed.
Getting killed. I mean, when you're down 20, 30%.
Yeah, and it seemed like every day, it was getting worse and worse and worse, and I remember we were trying to find that valley, like when is it going to stop? You know what I mean? When is it going to finally turn around? And I think right before it started to turn around, you and I were talking, it looks like it's going to. Like we had some optimism, and now we're seeing that come to fruition a little bit, I think.
What I'd like to see is, so the market has definitely recovered quite a bit, that 9+% or so on average. Is that hold, right? So maintaining kind of the level that it's at. So it's recovered, it's shot up 8 to 10%. We're kind of seeing a sideways trend right now, and let's make sure that holds, right? We had some big earnings last week and this week. We have over 70% of the companies that have reported. Numbers look pretty decent. I do think in certain sectors, next year, earnings will come down quite a bit.
Yeah.
And we'll jump into some of those sectors and what that means for earnings. But let me start off by looking at the different sectors, the outliers from the main or major indexes. So the first one we look at is the Energy Select Spider Fund. That's the XLE. That fund, or that ETF, I should say, is up about 27%. It seems to be down maybe, 10 to 15% off its highs. So at one point it was up 30+%, almost 40% for the year. I mean, 27% positive rate of return is not too shabby in this market environment. But in the last week or so, this particular sector is down about 5%. And when I compare that to the market, like you said, in those major indexes, for the most part, in the last 30 trading days, is up around 9+%, depending on the index. This is up almost 5%. So even though the market is going up in value in those three major spots, we still have energy that's going up. I mean, it's up about 5% for this past 30 trading days. So still positive. I know that oil has been getting crushed and some of these growth-based companies are kind of taking over. Let's see if that trend continues. I don't know. Next year, I do think when I mentioned sectors that are going to go down in value is when we look at the price of a barrel of oil being at around $90 right now, from way off their highs from 115 to 120 down to $90. The estimates for next year are right around $80 a barrel. So
Okay.
that's good news
Yeah.
for us at the pumps. I'm thinking about next year's gas at the docks at the marina.
Mm.
That's good news. That means that people can start to spend and travel more, right? But let's see, because right now we have not curbed inflation. The Fed is raising rates to slow things down. If oil is hovering low,
What is inflation at right now? I haven't looked.
I haven't looked at things like the recent CPI and whatnot in a couple of weeks, but there's indication that it's working, but at what level? So it's not working as if like the economy slowed down to the point where the Fed now feels comfortable
Mhm.
with that 2%. So if you have inflation at 9+%, we're far from two. So we've got a ways to go. And I think right now the Fed doesn't meet in August. Like I said, many people are on
Yeah.
vacation. We're not on vacation. No, we're still working, but a lot of people are out. Hedge fund managers, the Fed doesn't meet. Now, if the Fed did decide to raise rate, have an emergency meeting in August, that would not be good news. That is possible. You never know. You never know. It's possible. We're early on in the month, but if inflation numbers don't indicate that things are working at the level that they're hoping for, that could happen. Let's look at the financial sector. That's the XLF, the financial sector ETF. That particular ETF year to date, if I can pull this up, is down about 15%. So definitely showing some improvement in the last month or so. Let's compare that to the S&P and Dow and Russell. This is up about 5.5%. So same trend, not quite as good as some of the other big indices. And this is financial, so it is kind of weighted on the rate of inflation as well as interest rates. So that does have a bearing on how profitable these companies can be. But again, I mentioned this time and time, cleaner balance sheets. These are not the banks of the 2008, the market or financial crisis. So I'm looking for positive earnings from those banks. If we look at the XLRE, that's the real estate sector, see a little bit positive news today, up about 0.5%. But year to date, this is down just under 15%. So a little bit better than the financial sector. In the last month, up about 5.5%. So pretty comparable, about half of what the major indexes are doing. Let's take a look at the cryptocurrencies. They've been in the headlines lately. Not so good news, but year to date, we first look at the Grayscale Ethereum Trust. Excuse me. Wait a minute. Let's take a look at the GBTC. That's a Grayscale Bitcoin Trust. Year to date, it's down 58%. So again, not so hot. In the last month, about 10%.
Mhm.
Seems like it's trading in lockstep, at least, recently, the last few trading sessions.
I mean,
the
I
market.
think I heard that Bitcoin at least a couple weeks ago was starting to go up again for the first time all year. But I haven't looked.
It has been. I mean, so for the last month, up about 10%. And
Well,
the last week down a little bit.
If you remember, Bitcoin took like a 70% hit, I think. Like we were talking maybe a month ago, and like the year-to-date number on Bitcoin was like 70% down.
And there was recently a pretty big hack on one of the wallets.
Mm.
So again, I don't think it impacted Bitcoin. It was one of the cryptocurrencies, a smaller one that I don't know of. And that does have an impact, and I did see the cybersecurity stocks just yesterday jumped.
Down. Oh,
a lot of them jumped like 10, some of them 14%. And so that market is a little bit different. It's unique, right?
Mm.
So nobody wants to pay for cybersecurity, right? Because you don't get a benefit from that. However, as soon as a big financial crime happens, when there's a cyber hack, some kind of hack, all these stocks jump, and that's when everybody calls. It's like, I think of my neighbor when I lived in the city. Their house got broken into. What do you think after the dust settled? What do you think they did after that?
Yeah, they got a new
They
security
got a
system.
security
Of
system.
course.
So it's kind of like cause and effect. So I had a break-in, I've had an issue. Now I'm gonna seek out and find one of these companies to protect myself so it doesn't happen again.
Mhm.
The best time to get it is before something does actually happen to help prevent that. So when big headlines come out about cyber crimes, that's when you see these stocks pop. But on a balance sheet for a business owner, think about a small, mid-sized company, even the larger companies, they don't want to just shell out cash for crypto or for cybersecurity because there's no real benefit
Right.
until something happens and you say, oh, yeah, I feel safe now. Anyhow, so we looked at the Grayscale Bitcoin Trust. Now we're looking at the Grayscale Ethereum Trust. That is the ETHE. Year to date is down 63%, and in the last month is up 50.9%. That's a 5-0. Now, we saw that trend happen about 2 weeks ago when we looked at Ethereum. I said, could you imagine? I think it was up 35% at that point. So in the last month, just imagine, you want to talk about bottom fishing, 50% return in the last 30 days.
Yeah.
Pretty big move.
I mean, even if you put it's like $1,000 into it, you'd be sitting pretty right now.
Why not? Why not? No, I'm not that gutsy, if you will. And neither would we manage our clients' money for that kind of stuff with bets, side bets, and gambling. Anyway, moving on to the Grayscale Litecoin Trust. That's LTCN. Year to date is down 58%, and in the last month is up 52.5%. So nice moves in some of these coins in the last 30 trading days. And then our last index that we look at is the Spider Gold Trust. That's the GLD. See a positive 1% today. Year to date, again, it's been sitting pretty flat. It's down about 1%. And in the last month of trading, it's up 1%. Seems kind of boring. Maybe not so in favor. When people are nervous and scared about the market, they flee to things like gold. They also flee to things like fixed income. Not necessarily when you have interest rates going up, do you want to buy bonds that are paying a rate that was maybe attractive 5 or 10 years ago. In a rising rate environment, holding onto those bonds. If you're buying individual bonds, it's very different, right? You just hold them to maturity. As long as the company doesn't have any issues, you're okay. You buy a bond fund, that's very different. And then gold, typically you think has a store value, right? And, you look at a suit, the cost of a suit 50 years ago versus the cost of gold. And basically, the value, you figure an ounce of gold still buys you a suit today. So I don't know that it's necessarily kept up with inflation. I guess you could say that in a sense, but really when you buy gold is when you don't need it. When it looks somewhat cheap and somewhat attractive, you don't buy gold when the market is crashing and everyone's fleeing to it. The stock or the share price of gold, the cost of gold goes way through the roof. And that's the same thing with traditional assets right now. When you look at the safer, the non-traditional, the alternative type of assets that might seem a little bit cheap, less expensive, that's the time you want to buy them. You don't want to buy them when everyone else is buying them. It's already too late.
Yeah, makes sense.
So I think we're going to have to see the market trends. If we continue to hold this trend, kind of sideways trend, this upward pattern that we've seen in the last 30 days, 10% increase, it just goes to show, again, when you talk about clients asking the question, is now the time to be invested? Should I stay put? Should I go to cash? If you went to cash, you would have missed a 10% uptick in the market in just 30 days. These things happen quick. You got to be nimble. Most clients are not nimble. Most firms are not nimble. We're a smaller, mid-sized company, and I think that gives us an advantage. Think of like a cruise ship. You been on a cruise?
No, I don't have any
Never?
plans on going on a cruise.
No,
either.
You don't want to wear a mask and get
I don't know. I just don't like
20
the
vaccines. And
I don't like the huge cruise ship feel. I feel like they always get stuck. People always get sick on them. I'd rather just go to like, I don't know, some beach town down in Florida or something like that.
What about your parents? Been on a cruise?
They've been on a cruise, but like very smaller one, like
Like a river cruise?
So it's funny, they were supposed to go on like a river cruise in Europe last year or 2 years ago with a bunch of their friends, like a smaller cruise ship, but COVID happened, it got canceled.
Mm.
But they've been on one in like the Caribbean, and they say like the smaller boats are way better.
Tell you what, people either love them or hate them.
Mm.
We went on one, and I
Big one?
hated it. What's that?
Like a big cruise
Yeah,
ship.
it was a bit. It was massive. It was Royal Caribbean.
Mm.
I mean, there was everything from an ice skating rink to a bowling alley, tons of bars, casino, water slides, hang gliding, surfing, with that artificial wave that they
Yeah.
create. Kind of cool, like
Mhm.
good concept, but same thing. My wife was sick.
Mm.
There's a lot to do, but you're on a time constraint. And if you know us, we don't like time schedules.
Yeah.
I don't like being told when I'm eating dinner. And if you miss it, you got to go to a buffet.
I'm the same way.
So with that, I went on a tangent and ramble. Anyhow, let's take a quick break and we'll be right back with the show. Do you want help building and managing an investment portfolio that's right for you? One that will help you maximize growth potential while you're saving, help you generate income when you need it most, and eventually preserve what you've saved to leave to your beneficiaries? We do this day in and day out and take the stress and responsibility of making those decisions off your plate. Subscribe to our newsletter, read our blog post, and listen to our podcast to get a flavor of how we do things. Our firm is unique and capable of handling all your investment and insurance needs. Monarch Wealth Management, our guidance, your future.
Welcome back to the PennyWise Financial Podcast here at Monarch Wealth Management. Along with Constantine Kitrinos, I am Sam Gueli, and today we were talking about career changes. And that kind of got me thinking, and Cons and I have been having some pretty good discussions. And we've had a lot of clients reaching out to us, wondering about what happens if they change jobs. Everybody thinks if you change your job, it's probably going to be better for you. You might make some more money, might be able to do some more things, but there's a lot of questions that come within. It makes sense because you gotta think about things like your 401k, different health benefits, life insurance, how all that stuff works out. How do you transfer it? How do you continue it? And they have a ton of questions for us. They want some advice. They don't really know what to expect. And you were mentioning some good things earlier, Cons.
Yeah, we have seen more and more people ask us about, at least before they make a move, calling us and scheduling meetings because they are considering a change in job or career. Most of them is a kind of a lateral type move, meaning it's the same industry,
right,
but making more money. But there's a lot of things that they think about, and they reach out to us to help modify their plan. Right. So if we have a target retirement of 50 or 60 or 65, let's say, how does a job change impact that? Right. And so we look at a couple different things. Number one, we look at money. We look at compensation. Right. And some companies may hire you on as a W-2 employee. Some companies may hire you on as a contractor. Right. And so you're paid in a little bit different way. If you're a W-2 employee, right, you're going to have a salary. You're going to have some tax deductions, things like FICA, New York state tax, federal tax. You may have some other benefits like life insurance, right? Life insurance is pretty important to have, an important benefit, I think, to consider. If you're a 1099, a lot of those benefits are not included, right? So there's no 401k. You're an independent contractor. You're not eligible for a company match, right? But then there's some other things that are not related to financial aspects as far as planning, and that's work-life balance. It might be travel. It might be flexibility. It might be, okay, Sam gets to work from home 3 out of the 5 days of the week, and that has some actual value. If you say, geez, I don't have to commute every day. Gas prices are through the roof, even though we talked about this earlier, they're down, right? I think the average cost of a gallon of gas is now around $4.50, depending on where you are.
Yeah, they're down relatively speaking, at least.
I know. And it's sad when gas prices were $5.50. I was paying, now I'm premium. So gas prices are $5.50 and you're excited to see $4.30, $4.50 a gallon, but it's all relative.
Yeah.
just 2 years ago, I was paying $2 and something,
Right.
so less than half. But yeah, so those are some of the conversations that we're having now,
Mhm.
and I think they're all valid. And I commend a lot of our clients. I think that the clients of today, the people of today in general, the general population is more educated. They're willing to seek counsel from other people, whether it be their lawyer, their accountant, their financial advisor, and they're asking for help. They're asking for things that they may be overlooking. I could tell you 10, 15 years ago, a lot of people didn't do those things. They weren't as educated. They just changed jobs. Hey, I'm making 200,000. Now I'm going to get a job making 230,000. Sold. Let me take it. Oh, there's no 401k match. Oh, okay. There's no stock options. Okay. There's no healthcare. Okay. Healthcare is huge
Mhm.
nowadays. And like, so when I was at a couple different corporate jobs that we had healthcare, and it wasn't something I even thought about, right? Now the cost of healthcare has gone up dramatically. And I think the way that they process claims and you actually get your care does matter, right? Um, Being self-employed and having to shop for insurance, that's definitely a cost that people don't think about. Oh yeah, I'll just get a plan, it should be around the same price. And it's not. And so those are all the factors that we kind of talk through. And there's a couple clients right now that just have conversations with us last week and the week prior. Changing jobs is a big deal. Now, one of the biggest deals, especially if you've been with a company for 5, 10, 15 years, is what? What do you think is? What one of the things that one of the biggest things that they have to think about?
I mean, the first thing I think of is 401k.
Absolutely. That is the single most important factor when you've worked for a company for so long, got a company match, maybe you're lucky enough to get a profit share, right? Maybe some stock options. So you have to weigh those things when you make that job change consideration, right? How does this impact me? Okay, am I eligible to take all of my contributions and company matches and maybe even profit share from one plan to the next? Maybe. Have to look at the contract terms. So some of these profit shares, you may have to stay a certain amount of time. Could be a year, 2 years, could be 4 years, could be 5 years. Maybe you get a certain percentage of that money that they put into the plan. So you have to consider those things. And then the other part is, do you have an outstanding loan with your 401k? Some people do go through hard times. Maybe you needed a roof during COVID and you took a pay cut. Maybe you went from full time to part time. Maybe you got laid off. And so you had to access funds and have a payment, a 401k loan. We don't encourage it. We look at that as like kind of your last vehicle, your last strategy to utilize those funds. And yes, you are paying yourself back. The interest is pretty nominal, but you're also robbing yourself of future retirement money. And
Yeah.
so that I think is definitely a big part of the conversation. The other thing is life insurance. Not only the life insurance that may or may not be offered to you by the new employer, but what happens to your old policy? Is it portable? I don't know. A lot of people don't even think about that. They might have one or two or three or four times their salary. And if it's a group life policy, it may have portability where we could take that and convert that into a permanent policy that you pay for on your own. Now, chances are premiums will go through the roof
Mhm.
versus comparing that to a policy that you own outright, regardless of your employer. Sam Gueli works at Monarch Wealth Management, but the company that he owns in 5 years from now, the bakery that he decides to open up, um, you know, it, are we going to be opening a new life policy for you every time you change jobs or every new company that you own versus owning a policy outright right now, locking yourself into those premiums and paying a flat fixed premium for a number of years? Now, insurance gets goofy, right? Because there's all kinds of ads, and I see this all over the social media. Invest in this life insurance program, and you're going to have $1 million, and you're going to pull it out tax free. And I've gotten some calls, and even some of these people who are changing jobs or considering a job change are asking me about that. And I don't know if have you seen any of the ads?
I mean, there's a
on
ton
like
of ads.
YouTube or
There's a
TikTok or
ton of things like that that just scream scam to me. You know what I mean? And they don't care. They just want to get the next sucker that's gonna, believe what they say and just give them their money, and then it's obviously not gonna make them a millionaire.
no. And the way that I look at and approach life insurance is very different, right? Life insurance is really there to protect who? Your beneficiaries.
Mm.
It's to protect against income loss. How about any outstanding debts? How about burial? Those kind of things. So if you've funded all of your retirement plans, if you've maxed out on all your contributions and you're looking for other things that may be a vehicle for you. But the way it's marketed online is like every person who is between the age of 20 and 35 needs to buy this massive life policy, lock in those premiums, overfund it. Oh, and by the way, you have college debt, you have car loans, you have a mortgage,
Mm.
you're not saving. That's not the right thing for them to have a blanket recommendation like that. It's disturbing, honestly. It really is. And I think that leaves a bad taste in a lot of people's minds. And we've seen that too. So we have some prospects we recently met with that have these massive policies and they're shelling out cash every month for the premiums. And they're kind of struggling and saying, geez, do I really need this? So what are their options? Cashing out the policy that has very little cash value. Do they walk away from the policy? Do they convert the policy? We can do what's called a policy review. And that's again, all encompassing. So when you're changing jobs or thinking about like, hey, there's more money. Am I leaving anything on the table? Is my life insurance portable? What about disability? What about other benefits and factors? And then quality of life, right? Because there's stuff that you just can't calculate on paper, right? Yesterday I had a post. It was almost 7:00 at night. It was like 7:05. I looked down. I mean, with a blink of an eye, that day went by just so fast yesterday. And we typically record our podcast on Wednesday, but I looked down at 7:00 and my son Sebastian visited the office yesterday and he brought in his little McDonald's figurine, left it on my desk. And when I looked down and I saw that, and I kind of looked at my desk and I had a bunch of different things that I could be working on. Could have poured in another couple hours easily. But then it just made me think like, all right, I can get home, see my son before he goes to bed, have a nice dinner with family, or I could work and bust out some paperwork for the next couple of hours. And honestly, is it going to change anyone's life if I do it today, tomorrow, Friday, during a normal work day?
Absolutely not.
Probably not. And do you think anybody's going to appreciate that or remember that? No. But like you do that for an extended period of time, an hour here, half hour here, 2 hours there, over the course of your kid's life until they grow up to be an adult, that's going to have a huge impact on your relationship and it's going to rob you of time. So again, there's some factors that we can't calculate, right? So it's not just dollars and cents. Am I making more money when I change jobs? Is there more richer benefits? But it's quality of life too. And sometimes that means happiness. And you might forego some money, but it's going to make you a lot happier.
Yeah, for sure.
So those are all things that we're talking to our clients about and prospects. If you have any questions, I'd love to meet with you. 800-480-1580. I think that's all the time we have for this portion of the show. Let's take a quick break and we'll be right back. Do you have a high deductible insurance plan? If so, have you set up your HSA? There's a ton of people who don't know what it is or how it works. Even worse, there aren't many people who can give you advice about how to make the most of these powerful and unique programs. Not many advisors focus on this in their practice, don't understand the mechanics of how they work, or even where to begin helping their clients. Reach out to me, Constantine at Monarch Wealth Management, and I'll guide you through this process and get you on track to make the most of your high deductible plan and your superhuman HSA. Welcome back to the PennyWise Financial Podcast. This is Constantine here at Monarch Wealth Management with my co-host Sam Gueli. So Sam, we're covered a lot of ground so far. Talked about 401ks and job changes and what people are thinking about in 2022.
A lot of good stuff.
I think a lot of positive stuff, especially in the last 30 days. People are starting to feel a little bit better about their investments, right? It's like an emotional roller coaster sometimes.
Yeah, I feel like most people don't, just have the mindset where you just got to stick with it. Like we've been telling anybody who listens, just stick with it. It's going to get better. And, well, we've seen over the past month, it's getting better.
It is. And you think about anything that you do in life, planning a family, getting married, having a child, changing jobs, starting your own company. Is there ever like the ideal time? This is a perfect time to do it.
Not really. You think
there never is.
You think there is, but life happens.
Life happens. I can tell you, if I look back 20 years and you asked me the question of how my life was going to play out, it looks nothing like I would have imagined.
Yeah.
Nothing. And we plan for a living. So that sounds kind of sad, right? But the reality is that when we create these financial plans for people, you have to realize that not everything goes according to plan. And those plans change so many times because life happens. Things that are beyond your control, my control, you only control the things in life that you can. Everything else you kind of leave up to chance, right?
Yeah.
So when we think about the current environment that we're in, cost of goods and services is going up. Some of the quality is actually going down, right? We talked about job change. What are some industries where people are looking to at least the top rated jobs in 2022? So I looked at that.
That's a good question.
Looking at the job market. So total employment, this is according to the BLS.gov, occupational employment projections in 2022. Total employment in U.S. economy is projected to grow by 15.6 million. So that's looking through the decade of 2012 through 2022 to reach 161 million. So it's about a 10% employment increase. But what are some of the best jobs? So we look at money.com. So the best ranked jobs in 2022, number one, information security analyst, nurse practitioner,
really,
physician assistant, medical and health services manager, software developer, data scientist, and financial manager. When you say financial manager, I don't know. Does that mean us?
Does that mean you?
I don't know. I don't know if it means like
maybe like it could just be like a broad term for, I don't know, advisors and everything else.
Good question. I mean, some people might look at their business banker as like their financial manager because they have most of their money invested in business and real estate and things like that. They go to their business banker for all kinds of questions, probably similar questions to what we field on a day to day. But so those are some of the jobs. Now, I did just hear, if you've heard the earning reports on a lot of these tech-based companies, Meta Platforms, formerly known as Facebook, you look at Google, you look at Netflix, you look at even, I guess you could call them a competitor, Robinhood, probably not a competitor because those clients would never be our clients unless they get fed up and realize like, hey, I can't make money hand over fist for years and years to come on cryptocurrencies, trading on Robinhood and trading options. So I think a lot of those clients have left. All that soft, easy money that came from like COVID and people staying home and kind of the gamification, if you will, of buying and trading stocks, they're all laying off. They all have job openings that they're not going to fill. They need less and less engineers and more technology. They need more chips. They need more storage. They don't necessarily need more bodies working for them, right? Because they're tech-based platforms. So when I hear that the top ranked on there is information security analyst, that doesn't really surprise me because a lot of these tech platforms have so much data and people want to steal or access that data all the time, right? We talked about cybersecurity. I'm very long on cybersecurity stocks, right? For the next 10 plus years, I think, that will continue to go up and up. How do you buy stuff? It's going to have to. Like, look at the shopping trends that we've seen in the last 5 years. Now, COVID, of course, accelerated that. But you look at things like shopping on Amazon, Target, Walmart. The sad part is there's no toy stores anymore.
Yeah, Toys R Us is like getting killed, right? That's been in the news.
So I would love to bring my son back on because he's so upset about. So we showed him like FAO Schwartz and like Toys R Us at a very, very low level. So this is what he understands is Jeffrey went bankrupt. And he asked me all the time, Dad, is Jeffrey doing okay? And Jeffrey, I'm talking about the giraffe from Toys R Us.
Yeah.
Dad, I can't believe Jeffrey went bankrupt. You know what he says? He says, Dad, Jeffrey should have added music and things to do for people when they go shopping. And I said, really? And I thought about that, and it was just a kid's idea of something fun and exciting and different.
Mhm.
But think about that for just a minute. I guess in a way, he may be alluding to the fact that maybe it should have been more of an experience. Think about when you go out to eat. Like you order soup and a salad. You could just make that at home, right?
Mhm.
You're not going there because, well, you might be going there because they can cook better than you or me. They have a special recipe, but you're kind of going there for the experience, right? To be with friends, to meet with, maybe you go to the bar and you have the bartender engage in conversation about sports. You meet other people there. You start talking. It's the atmosphere. It's the environment. Amazon doesn't have that.
Mhm.
Walmart.com doesn't have that. I mean, you might go into Walmart for the experience and just people watch. I don't know.
mean, if you're gonna people watch, that's the place to do it. Right?
Yeah, I know. Tell me about it. Which,
Yeah.
by the way, I was at a Target over the weekend. We were buying. We had another birthday party. We have another one this weekend. And in the parking lot, there was a violinist. You ever hear of this? They call it like the Target scam.
Mm-mm.
So it's usually a small group of people, like 2 or 3 people playing the violin. They have a massive speaker, and they're asking for money. And the music is incredible. I mean, I heard the music like as we pulled into the parking lot, and I already knew because I had read about the scam on like Reddit and some other forums. But apparently, what they do across all these Target parking lots is this small group of people go in. They stream music that sounds like it's coming from the actual instrument that they have, and it's a high end like violin. It's like insane. It's like a what do you call it? Not a quartet, but it's basically 2 or 3 people. One
Mhm.
is playing a certain instrument. And as they play the instrument, it somehow syncs with the music. So it seems as though they're actually playing the instrument. It's insane.
So they're not actually playing the
No,
instrument, but they're
no,
like pretending.
correct.
Hmm.
And it's like a sign that says,
So
like,
how do they get away with that?
I don't know. A lot of people don't know about it and they feel bad because you see these people, and they're not like dressed well. They're dressed in like a t-shirt and whatnot. But I read the forums and like, just take a look at those people, right? They've usually got like a high end speaker, a fantastic, like nice violin, nice instruments. And actually, we saw them after they were quote unquote taking their break. I guess he's talking on an iPhone that's probably $1,200 or $1,300. But yeah, you need money from me. Like I guess I don't know. Is it a scam? Like if you were to give them money, you're giving them money because you like the music and you kind of feel bad. You want to support them.
Yeah.
It's not really a scam, I guess, right?
Why don't they just learn how to actually play the instrument?
Because if they did, they get called out. They probably can't.
Yeah.
Not at that level.
Yeah. Man, that's so weird though. Just it's like lip syncing.
Kind of, yeah.
You know,
Milli Vanilli
with
back
a-
in the day.
Yeah, with an instrument.
So I guess where we're going with this, we were talking about different jobs, different careers. And I mentioned my son and Jeffrey and all that with Toys R Us going bankrupt and closing down on the Kids R Us's and Babies R Us's and whatever it might be. But there's limited selection. A lot of that business is going online. So cybersecurity, those kind of things. Again, less engineers and more equipment, more chips. We talked about it in cars, the need for those chips. I think there's a bigger need for that than there is for people, bodies to actually work in that industry.
Yeah, I think the chip shortage is still an actual thing. I think supply chain issues are still real. I've even heard like Tesla, for example, they are taking some features out of their cars because they can't get the right chips to offer them.
That's got to be a pretty integral part of a Tesla. I mean, everything is when you have you sat in one?
No, I've
You sit
actually
in
never
one. It's
been in
like a
one.
huge computer screen. I mean, it's all
Mm.
tech. It's without those chips, I got to imagine that could have a huge impact. Although they just came out with some numbers last week and things are starting to improve a bit. But I think there's a long runway between right now. What do they have? Maybe 4 or 5% market share of the overall cars
Yeah,
on the road
it's pretty
today.
big
So
for them at least.
yeah, they have a bigger market share of the EVs, but I'm saying
Yeah.
EV versus like gasoline
Mhm.
cars. I mean, it's such a small number. But there are things that people are looking for in terms of saving money, and they use these apps, right? So there's all kinds of apps that you can get out there. And Forbes actually has a list of the top rated apps. One of them is Personal Capital. I don't know if you've heard of that. Mint. There's Mint. There's this one that's called YNAB. You need a budget, I guess. YNAB,
Hmm.
never heard of that one. There's Pocket Guard. There's something else called Good Budget.
Probably all
And
exactly the same too, right?
I mean, there's Stash, Honeydew, Digit. We mentioned this a few weeks ago on the different types of apps and the models. So some of them are free, right? Quote unquote free. Input all your information, link all your bank accounts. And you have to be comfortable knowing that they're probably selling your data in some way, shape,
Of
or
course
form,
they are.
right?
Everything does now anyway.
And as long as you're comfortable with that, you are paying a price, right? Because there's a certain amount of value that your information is worth. Just like Facebook, just like any of these social media platforms, when you access that stuff for free, you are the actual product,
Of
right?
course, yeah.
And so without you going on Facebook or any social platform and posting content, they have nothing. There's nothing,
Mm.
right?
I mean, it's all just ad space. They just want you to look at ads.
Correct. So when we think about technology, I always go back, I always revert back to one of my middle school technology teachers. And he said there's 3 reasons why you should adopt technology, incorporate it into your business, or if you're considering making something, it should achieve one of these 3 things, or maybe a combination of making something easier, cheaper, and faster. And I think if it doesn't solve any of those problems, it's really just something kind of flashy that's going to be like a fad. It'll phase in and phase out. But these types of apps, I like the concept of them. Do they actually work? Do people follow them? Some of them yes, some of them no. But chances are, if you're paying for some type of subscription, I think you have more buy-in there. So some of the things that we offer as a part of our planning does allow you to aggregate your accounts and take a look at our progress. And I think that's important. When you have the human connection tied in with technology, I think you get the best result. Imagine people that want to lose weight and go on a diet and they download an app and everything is done through that app. Your accountability is you logging into the app and saying, yes, you did something, or no, you didn't. You ate pizza today instead of your grain bowl that you were supposed to eat. Right. But now let's say you and I meet and you have that app connected and I say, Sam, why didn't you achieve this? What did we do wrong? Where was our shortfall? So you got the coaching element. So there's a human and technology. When you marry those two, I think you get the best results. And that's really what we try to do, is not have technology drive the entire conversation, result, asset management. Same thing on the management side of things. So when we manage money, we don't have a robot that's trading, right? There's no robot or algorithm that says, if the stock market does this, sell these stocks and buy these stocks.
If you create an algorithm like that, you'd be rich, very rich.
Well, I'll tell you what, there are a lot of them.
I guess a successful one. I mean,
The problem is that those apps make some interpretations, right? And the algorithm is only as good as the person that's programming.
Yeah, right.
Right. And if there was an easy way to say, if X happens, you need Y to happen and Z will be the result. If it was as easy as a formula, the person that comes up with that formula would have all the money.
Yeah, you're right.
We'd all be out of business. And this business is more of an art than a science. I say this all the time. If it was a science, there would only be one product. That's it. Everybody would do it because it would be the best result.
Yeah.
It's like me and you paint pictures. Which one is worth more money? Maybe it's yours, maybe it's mine. Depends on who the person is that's going to buy it. Right. You know what I'm saying? So I think those components are things that we try to incorporate as both the human, the technology, to help drive a lot of the outcomes that we do. But the combination is very powerful. And I think those are some of the things that will help people as they try to combat inflation and rising costs. Make sense?
Yeah, makes sense to me.
Well, let's keep a watch on the market. Let's see what's happening in the coming weeks as we head into the tail end of Q3 and into Q4. We have some pretty big elections coming up near the end of the year. Again, we don't want to get too political as far as how politics will play into actual returns, because we've looked at that before. And whether we have a Democrat or Republican in power, we know we can still make money. These are real companies, real stocks. They have real earnings. And we want to make sure that we find the right ones to give our clients the best solutions. With that, I think that's all the time we have today. Thanks again for listening to the PennyWise Financial Podcast. This is Constantine here at Monarch Wealth Management with Sam Gueli. We will see you next time.
You've been listening to PennyWise Financial, brought to you by Monarch Wealth Management. Constantine and David really care about their clients. They want to make sure you're happy, so you'll continue to hire them. There's no commitments, and clients are free to leave whenever they want. Think about being able to pick up the phone and call someone for guidance and advice on almost anything, from buying a car, selling a home, buying vacation properties, or even selling a business. Reach out on the website at monarchwealthmanagement.com. There are 2 offices in Rochester and 2 offices in Buffalo. Reach out to us on Facebook, LinkedIn, Twitter, and YouTube, or call us toll-free at 800-480-1580. That's 800-480-1580. Until next time, this is PennyWise Financial, signing off.
The opinions voiced in this program are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, and financial advisor or tax advisor prior to investing. Securities are offered through LPL Financial, member FINRA, and SIPC.